Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks as always for having me.
Tim, since the last time we talked a couple of weeks ago, commodities seem to have weakened. What's your take on that?
Well, they have finally given way to the statistical expectations. I had said that I thought that the advance in crude oil out of the August lows would prove to be counter trend, and that it would be followed by lower prices, and it has been now. The same with the CRB. It's re-weakened. Since we've talked, I think the Baltic Dry Index has broken below its previous 3-year cycle low, as has the Bloomberg Commodity Index, which, by the way, is trading at 1999 levels. The Industrial Metals Index has broken below its previous 3-year cycle low, and, by the way, is not confirming gold, which, that non-confirmation is indicative of this having been an ending push into the 9-year cycle top with gold, which is what we were thinking anyway. So yes, I think gold is still peaking, and that it's going to follow commodities. I think this commodity warning is a major warning for gold, at least at this juncture. We've also seen, or as a result, I should say, of this commodity weakening, I think that is an indication of the weak economy and the deflationary pressures. And then in conjunction with commodities, what I started to say a while ago, we've also seen a weakening, not in a big way yet, but a weakening of interest rates. The 3-month is still flat, pretty much, but the 1-year has continued to weaken. It's below the 3-month. The 5-year is below the 3-month and the 1-year. It hadn't quite broken below its August lows yet, but we were expecting lower interest rates, and that's coming together. And I think the dollar is key. As we sit, equities, they continue to hold.
Now, equities have been setting record highs. Do we have any idea why they've been so attractive when everything else is falling?
Well, I think it's a couple of two, who knows all the pieces, parts, but one, again, I maintain there's no question in my mind by every historical norm, technical, statistic, whatever, however you want to look at it. I mean, it is a bubble of all bubbles, mother of all bubbles. But I think it continues to hold for a couple of reasons. I think, number one, we continue to see intervention. We continue to see, when I say intervention, I'm talking about, like back in September, the market was on edge, and we saw, the non-QE QE, and, that continued to ramp until equities got a bid, and then we continue to see it manipulated, which is, call it what it is, with fake news. And when I say fake news, I'm talking about, the news on the trade deal, news on employment numbers, news on the state of the economy, and so forth. And it just, one thing feeds on the other. And I think it's just the nature of the bubble, and that this is going to be able, it's going to continue until control is lost and it doesn't work anymore. Then the structure will fall in place. It'll tell us, and then I think it's going to, reality at some point will set in. But in the meantime, the game with equities goes on. It's, they're the last man standing, and all this, the weakening or re-weakening that we've seen of commodities since, in the last few weeks, a month, and then the weakening of interest rates, and then all the other economic data that we've talked about. I mean, it's a sign of the times, and I just think that, equities is the last man standing. And it's because of, like I said, the nature of the bubble and the manipulation behind the bubble.
Given that, what should investors be doing with their money right now?
If anyone is still in this market, I mean, that's wonderful. They've done well. But, I'm not giving specific advice, but I'll tell you, if I was in the market, I'd be dancing close to the door, as a friend of mine used to say. But the problem with that is, people have been we've seen this market on edge numerous times, even the decline back into 2018, and it bounces right back. And that's because of, like I said, I think in part the intervention and in part the nature of the market and the environment, overall environment that's generated. Everybody knows it's going to come right back, is what I'm trying to say. And of course that's true until it's not true. And so the danger is that once it goes and it really breaks and there's real structure in place and it really breaks, then people aren't going to recognize it. They're not going to know. They're going to think, it's just like all the other breaks of the last 10 years. No big deal. Fed's got this. Everything's fine. It'll bounce right back. And that's what makes this so dangerous. That's the thing. But then which break is it? When do we finally get a setup? And that's what we're trying to watch and monitor. When do we get a Dow theory primary bearish trend change? When do we get some cyclical structure in place? And that's what we're watching. And until those things happen, hey, it is what it is. But once those things happen, then I think it's risk on, and the test will be at hand. Can it be saved again? And like I said, this game can continue until it can't. But, all the underlying data is certainly telling us that it's an illusionary prosperity, if you will.
We'll have more with Tim Wood right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're chatting with Tim Cyclesman Wood. Tim, you've been digging deeper into some of the economic trends and data, and you've taken a look at the non-farm payroll rate. What's that look like in the U.S.?
Well, we've covered a lot of that stuff in the last couple of interviews, just talking about it at a high level. But, one example of what I mean about the underlying economic conditions, and this is just a historical fact. But you're right, in trying to get a better feel for the true state of the economy, you dig, right? And in digging, one of the things I found is that the growth rate, non-farm payroll growth rate, it's dipped to, I don't know the specific number, it doesn't matter, but, like 1.4% or 1.3 something percent, whatever the number is. And looking back and analyzing that data, one thing that jumps off the page, going back to 1940, is that every time we've been at this level, it has resulted in a recession, with one exception. And that one exception was, I think, 1952. But then if you filter that 1952 exception, then what you find is there's some things then that were not present that's present now. And then you look at, another thing, like you look at the industrial production numbers. Well, the growth rate is actually below zero. So, everything you look at or continue to look at and with the economy is actually quite negative. But again, equities continue to hold, and I think that is because of the manipulation. When I say manipulation, I'm talking about all forms. The non-QE, QE, the reassurance through news and tweets and so on and so forth that the economy is great and that jobs are good and this just illusion of prosperity, which actually doesn't exist. But if you believe it exists, then I guess that's all that really matters. And so, therefore, we have this illusion, and here we are. But at some point, like I said, you can only play that game for so long, and then reality will set in. But anyway, everything you look at, the other thing. I'm rambling a bit, but the other thing with this some of this economic data, particularly with the employment numbers, what they'll do is go back, say so many jobs created, and then go back a year later and then revise the data. When nobody's looking, nobody cares. I mean, who cares if they revise data that's a year old? And so those are the type games, and when I say manipulation, they're being played, and it creates a false, a false perception of prosperity that's really not there.
Do they measure the quality of jobs or just the quantity of jobs?
I don't know what all measures are out there. Non-farm payroll is supposed to be a wide. It doesn't discriminate as far as quality. It looks more at quantity. I think it's supposed to get 80% or 80% plus of the U.S. job market. The unemployment rate. That number can be heavily manipulated because of what rolls in and out of the number, what's included. But there are some better cuts, and one thing I think that is most telling is actually the growth rate of the employment numbers, not the unemployment numbers, but the employment numbers, and particularly the growth rate, because that gives you, if there's no growth or if growth is waning, then it tells you that the economy is not expanding, you're not adding net new jobs sort of thing. So it tells you the slope of the curve, if you will. And that's what we're seeing with all of this economic data, is the growth rates are contracting.
We'll have more with Tim Cyclesman Wood right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, with the coronavirus in China slowing down their economy, which was already slowing down and cutting off supply chains and so on, what do you see happening with oil if the country with the most cars on the road, China, isn't around driving right now?
Well, that's a good point. And, the statistical expectation was that we would see weaker crude oil prices, weaker commodity prices. And that was all based on the statistical behavior of the cycles. And, it's amazing how you see something set up within accordance to that structure and those underlying statistics, and then the news comes along and it happens. And you see that time and time and time and time again. And the setup was there. The expectation has been there. It never was blown out with the commodity complex. And so therefore, what I'm saying is that this news came along and it has, obviously has contributed to the suppression of oil prices, and just like it should have. So I guess what I'm saying is that the news really is neither here nor there to me. The fact of the matter is that, commodity prices have done exactly what they should have. And there's always some news eventually that surfaces and people point to it and say, it did that because of this. Well, yeah, but, it was set up in a fashion to where it should have done that before the news came along in the first place. So as I look at it, the technical expectation, was in place and it's done exactly what it should do.
What kind of numbers do you think we'll be looking at when it comes to oil?
I think we're at risk of going below those 2016 lows. I mean, if you look at some of these commodity indexes, they're already below their, or down to their 1999 levels. I think it's the Bloomberg index is already trading at 1999 levels. The CRB would probably be there, but it's been recalculated. I don't remember. I think it's back in 2012 or so. They massaged it, and changed some things, so that skewed the numbers. But, these commodity indexes, I've said all along that they were counter-trend bounces in commodities, and finally that reality set in. And again, that was based on the statistics, and once they bit. And it's the same thing with equities. I don't mean to digress from commodities, but it's the same thing with equities. The reality will eventually set in, but we need the setup. And that's the thing that's been blown out with this manipulation, is that they haven't allowed a setup to bite. Every time you get kind of close, it'll get blown out. So if that structure with some negative statistics that would allow the market to decline from a technical perspective aren't there, then by default, hey, it goes higher. It has an underpinning that it can move higher. And that is what has successfully been able to, from a technical perspective, that's how they've successfully been able to continue to kick the can down the road, as you say, with equities. At some point, I think what is going to happen with this is that pretty much as all bubbles, if you look back, they top abruptly and with little warning. And if you're not aware of the structure as it falls in place to give you that warning or misread it, then there is no warning. And next thing you know, it's down. And I think ultimately, this bubble will be no different.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.